Welcome to Exchange Rates UK TV. It is the 23rd of July, 2021, 3:30 p.m. Eastern Standard Time. Taking a look at Cardano here. I want to take a look at the candlestick charts first. You can see that it is trading lower today. Did spike up a little bit higher. Kind of matched up the high of yesterday, but currently we're just trading lower and continuing to push lower through on the rest of the trading day as we approach the end of the New York trading session. Red triangle here indicates a bearish descending triangle, which is an inherently bearish pattern, no matter where it shows up at the bottom or the top of a trend. And the bottom of this triangle really, it's in an interesting zone because you could consider it to be higher or right where it's at. The volume point of control for 2021 is at 120. We've been testing that zone now. After we broke down below it, we're currently experiencing the retest of that break. And if we close, lower than where we're at right now, if we close somewhere around where we're at or lower, then that is more than likely going to trigger a pretty steep sell-off because that will indicate that the 120 zone is holding as resistance and that it needs to test lower. As far as how low would it go? Well, you can look at the volume profile, and the next high volume node, it's not even that large. It is down at the 90 cent to 92 cent level, which is really within that 84 to 94 cent range that I've talked about before. 120, if it doesn't hold, we should expect it to travel down lower to that 84 to 94 zone. But that 90 cent to 92 cent one is where there's a good chunk of support. So you got the 50% Fibonacci retracement at 90.42. The 87 at 87.88, that's 100% fib extension of the prior swing structure. And then the most current swing, the new one that I drew, the newest Fibonacci expansion, is the bolded area here, the bolded numbers at 92.85. That's the 618 Fibonacci extension of this current swing. So that is right there. Then you look at the RSI down below, you'll see that it's sitting at 40, but crossing back down lower. So that's more than likely going to play out as some selling pressure. And then you look at the current price action relative to the composite index, and you'll notice that the composite index has a higher high. All right, there's higher highs here in these peaks, but that's occurred while prices have moved down lower and we've created lower lows and lower closes. This is known as hidden bearish divergence, which basically states that that we should see a resumption of the move south. If the overall trend was bearish, then we should see a resumption of the bear trend. And so what we should see is a movement very similar to what we saw between June 22nd and July 4th. Another move down lower, although faster. This was a kind of a prolonged period of corrective movement. And then we should see that play out a little bit faster here as we get into August. Looking at the point and figure charts, on the 2 cent 3-box reversal, we can see that this column of X's here, looking at the top left, we've moved back up into the 618 range of this retracement. And, if it moves up a little bit higher, then we get into some zones where, that could entertain an alternate look at the bull market. But for right now, it looks like we would, if we get a 3-box reversal, that's probably a good short opportunity as well. Then you look at the 1 cent 3-box reversal, you can see this pretty standard bear flag formation here and the continued breakdown lower. We'll have to see if it can break down below 112, then we should have a pretty fast trip to that 90 cent level. But just keep an eye out on this market as we transition into the weekend. There's a lot of fears about the Delta variant and a lot of concerns about major cities going back to masks and sparking some fear. So we'll have to see how that plays out because we know that cryptocurrencies are a risk-on asset, and what happened last year with that is they just kind of took a huge nosedive. So we'll want to be very careful about that moving forward. As always, thank you for watching. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe.